Archie, with all that's going on in the markets, the volatility and everything, wouldn't it be nice to have some sort of volatility guide to help us get through it?
Rob, I've got just the thing for you. I'm Archie Hoxton.
And I'm Rob Hoxton.
And this is Last Paycheck, weekly wisdom to help you retire and stay that way. Welcome back to the Last Paycheck podcast, brought to you by Hoxton Planning and Management. We're your hosts, CFP professionals Archie Hoxton and Rob Hoxton. And today we're going to talk about something that everyone is talking about right now, and that's market volatility. And there's been plenty of it.
Yeah. And everybody that's in the financial planning or investment business seems to be saying the same thing. Mm-hmm. And it's interesting in the conversations that we have with clients. Oftentimes the call starts like, "Hey, Rob, I know what you're going to say, but could you say it again?"
Yeah.
And so what we've done is we've put together a market volatility guide, which we're going to talk about today. It's something that you can get if you want, just by going to our website and asking for it. We'll email it to you, and maybe you can have it sort of in your hip pocket. So when you get a little bit freaked out with all the stuff that's going on, pull it out, take a look at it, as a reminder about what you should and shouldn't do.
Yeah. And that's really it. We try to keep it really simple. The common reactions that often end up being mistakes, things that you shouldn't do when the market gets really volatile, and then some things to do. Because sometimes what you want so badly is to do something.
Yeah.
To have some control.
I've got to take action.
Yeah. And sometimes the hardest thing to do is that when there aren't really good options on the table, sometimes it does make sense to just take a deep breath and not do anything. But sometimes it does make sense to do something.
Yeah.
So we'll talk about that. But let's talk about what not to do, what to avoid that can be ultimately a mistake. I would say the first one, the big one, is panic selling.
Yeah. Yeah, and this is all emotional stuff. So, I mean, neither one of us are therapists.
Right.
But it seems like in times like this that it'd be helpful if we were therapists, I think, right?
Yeah.
So the emotions, you hear about fear and greed as being real, important driving emotions when it comes to investing, and they both have a tendency to derail you.
Right.
In this case, take a deep breath and don't be tempted to do panic selling.
Yeah, I mean, with all of these mistakes, we'll see. I mean, it's a very real thing. When you see the markets drop and you look at your own accounts and the values have come down, it's only human to get emotional about that. In fact, I would say humans are not really wired to be good investors on the whole, and it often requires some general principles to apply.
That's right, because if you look at throughout human history, let's say we're a couple of early humanoids on the Serengeti and a saber-toothed tiger jumps out of a bush, what are you going to do? You're going to run away from it, not run to it.
Right.
So it's the same sort of emotion or emotional response when we see our retirement accounts getting pummeled. What do you want to do? You want to get away from it.
Yeah, stop the bleeding.
Right, which is probably not the right decision in this case. So,
yeah. Another thing that we're often tempted to when markets are volatile, and volatility can be one way or another, is to try to chase after whatever's been performing well. There are certain companies during this recent volatility that have done well, and they're in the minority. So it often is tempting to say, I'm going to get into these companies. I'm going to move to this sector. But the problem is they've already done well.
Right.
That doesn't necessarily mean they're going to continue to do well. And so chasing performance, you might be selling something that's done poorly and doing something and buying something that's done well. You're selling low and buying high. You're doing the opposite.
Right before it lags. Right.
Investment decision making.
Yeah,
exactly.
Yeah. So you might be doing the opposite of what you should. Another one is when you feel stressed about the markets is to pause contributions. So if you're doing, biweekly contributions withheld from your paycheck into your 401k, it's tempting to stop that. We hear this all the time. do not forget that volatility, when you're in the accumulation phase of life, is your friend.
Yeah.
Because for a short period of time, those important investments that will fund your future retirement, they're on sale.
They're at a discount.
If you're tempted to make a change to your contributions, don't stop them, increase them.
Yeah.
Right?
Yeah. Those dollars will be some of your best performing dollars. And I know it sometimes feels counterintuitive buying something when it's not doing well compared with buying something when it is doing well. But, if historical trends tell us anything, people are still going to need the greatest businesses in the world to provide the goods and services that they provide in 5 years, in 3 years, in 2 years. So there's an element of being okay with the temporary chaos, knowing that the fundamentals are going to look good.
The stock of those companies, right? The stock of those companies, those great companies.
Yeah.
Greatest wealth building tool ever known to humanity has been U.S. businesses.
Yeah.
Small and large.
Yep. Another trap to avoid is, sort of this all in and all out thinking, right? You often see, okay, I'm gonna go to cash, or I'm gonna put everything into the stock market because it's volatile and prices are good. This is another kind of sort of almost gambling, risk taking. You're either getting completely out of the market in the hopes that you'll avoid some of the volatility, or putting everything into the market in the hopes of taking advantage of it, but increasing the risk in your portfolio to a degree that's probably beyond what's prudent. So, and you're kind of getting into this sort of gambling market timing approach. And we see that sometimes, and it's either fear or greed based. But
and it really depends on luck as an investment strategy, and that is a terrible investment strategy.
Right. As much as it seems like we can tell what's about to happen, we really can't. I mean, even if you feel a strong sense of conviction, the markets can surprise anyone.
Archie, another emotional trap is catastrophic thinking, and it's really easy to do that, particularly right now. Because if you feel really strongly, if you have really strongly held political opinions or beliefs, you may feel like right now is different than every other bear market that has ever occurred. Or you may feel like this is not a bear market at all. It's like Christmas morning every day. It just depends so often on your political views, whether or not you engage right now in catastrophic thinking. And it's not only will it rob you of your joy in life, but it will also potentially cause you to lose money if you act on it. So
I will say this. There is always a reason to think that this time is different. With every bear market, every recession, there's always going to be a good case for this time is different, and it's always been wrong.
Yeah.
But 2022, we had runaway inflation, felt very different. COVID, crazy geopolitical event, changed so much about the world. This time is different, but the markets continued to march on. And I think that's the key is that kind of thinking is dangerous, because there's always going to be a really good, convincing reason to believe that it is different.
Yeah, the catalyst may change.
Yeah.
But the market reaction is the same.
Yeah, exactly. I would think the last thing to avoid is spending too much time consuming media.
Oh my goodness.
Whether it's social media, news media, financial news, all of the above, it can, especially in times like this, it can really add to that fear and greed and that emotional decision making. And
it's funny that you're suggesting that as we record a YouTube video and a podcast. But
keep watching ours, I guess.
Right.
No, but it is. I think it's hard to tell the difference when you're looking at media between, who's putting out some sound investment principles that you can make decisions with, and who is fear mongering and who is trying to sell something, and who's just trying to draw your attention in by making you fearful or greedy about the markets. Yeah.
So what are some of the smart moves that people can make or not make in times of, market turbulence and fear?
Well, the big one, and this is one that if you've been investing for a while, you've probably heard before this exact phrase, stay the course. If you have a good plan in place, and
Yeah,
it's
well, that's
well
the key.
thought out, yeah,
That's the key. If you have a good plan in place and you've thought this through,
then you have good, and if that's the case, you've got good reason to stay the course. If you have a good plan, it has been accounted for in the plan. Any good financial plan has assumptions that we're going to have markets like this along the way. And assuming you stay the course, you still meet your goals. So staying the course, not making irrational or emotional decisions based on, whatever we're worried about at the moment with the volatility.
another one is to rebalance with purpose. I love that. I love this. And this is hard to do because rebalancing to your target asset allocation percentages means that you're probably going to sell a portion of your investment portfolio that has performed the best and buy the portion of your portfolio that has recently performed the worst. So if you have a mixed portfolio of stocks and bonds right now, the bonds have performed well. You're probably up in the bonds this year and you're down in the stocks. So that means you're probably going to sell bonds to buy stocks, and it's not going to feel very good, right?
Yeah.
The operative word is feel. You got to get the emotion out of this. If you rebalance, then you are automatically taking advantage of what's coming, and that is the recovery of the market. And you're also addressing some of the most important risk management tools that you have in your toolbox, and that's through rebalancing.
Yeah, I mean, the other thing about rebalancing, when you're working, you're always buying new investments as long as you don't pause your contributions. So you're taking advantage of when the market is low. But when you're not working and you're retired, you're not making these contributions. So the next best thing is taking advantage of these opportunities to sell assets when they're doing well and buy assets when they're not. And so you're selling high and buying low. And so that's sort of the next best thing after always making new contributions.
Yeah.
So, yeah.
You mentioned it. Keep on investing. Don't stop those monthly, weekly, whatever investments that you're making because your investments are currently on sale.
Yeah.
If you've ever been to a place like TJ Maxx and you could get 2 shirts for the price of one,
Yeah.
you probably did it. So why not apply that to your investments as well?
Oh, absolutely. Another would be harvest losses.
Yeah, this is the lemon and the lemonade sort of thing, right?
Yeah. The market gives you lemons. You harvest losses. You make some tax lemonade.
Yep.
So, and what you're doing, and we've had episodes on this in the past, so we'll keep this high level, but you have investments that you paid $10, they've come down to $8, you sell it and buy a similar investment at $2 loss. You take that, you bank it, you use it on future capital gains, you use it against your ordinary
carry
income.
it forward, indefinitely as long as you're living.
Yeah.
To when you might need to offset capital gains.
Yeah. So that's another great thing to do. Again, focusing on what you have control over, which I would say is the last mindset. I guess this is more of a mindset than something to do, but it's just focusing on what you can control. And sometimes it means just recognizing that you can't control the markets, so you need to stay the course. Sometimes it means that it's rebalancing or loss harvesting and taking care of the things that are in your control. And sometimes it means turning off the media and saying, I'm going to read a book. I'm going to go outside. I'm going to spend time with my family, and I'm not going to let this suck all the life out of me for, however long this market lasts.
Yeah, and when we emerge from this market volatility, if you're the person that says, I am not going to let this happen to me again in the future, well, prepare. That's the key. So be prepared because it's going to happen.
Yeah.
It happens every couple of years. When it does, you want to be prepared. So what are some of the things, Archie, that you can do to be prepared for the next drop?
I would say the first thing is having a good plan. If you didn't have a plan this time around,
rules of the road. Have your rules of the road. I love this because I think this is a great point that you make. I love to sit with a client and in the relative calm of a nice air-conditioned conference room, and I like to talk about someday the markets are going to scare the you-know-what out of us, and you're going to be tempted to do the wrong thing. Let's figure out what we're going to do now when it's not happening. So let's have a playbook already written. Think about how we might react, and let's have a plan now before we get there.
Absolutely.
Right.
Yeah. And it should be in accordance with your financial plan, which accounts for, like we said earlier, these bad markets. Another thing is, if you got to a point where this was keeping you up at night and you were so worried that you were tempted to make a rash, or maybe you did make an emotional decision, that might be an indicator that your risk tolerance is lower than you thought. And it might be time to reevaluate how much risk you have in your portfolio. Maybe you need more money in safer assets like bonds and less in stocks. Because it's more important that you make good decisions along the way and sacrifice some of the expected returns in your portfolio than make bad decisions and sacrifice a giant chunk of your long-term results.
Yep.
That is important to reevaluate. Or you may find that, hey, I actually, this didn't really bother me. I think I could be a little bit more aggressive. So
another thing you can do is, as you're planning for the next, bear market, which will happen at some point, certainly while you're retired, is to stress test your plan.
Mm-hmm.
So it's really cool because there's enough market history, 150 or more years of market history, that you can actually take your financial plan and stress it against certain scenarios and see with some certainty, at least an estimate, what your portfolio is going to do if something happens again. If the Great Recession were to happen again, some sort of credit crisis, or if there's another pandemic, what would that mean to the value of your portfolio and to your likelihood of having enough money to see yourself through retirement? You can do that stress test. We do it all the time.
Yeah.
At least once a year for all of our retirement planning clients.
I would say I would add one final thing, and that's cash. Cash is nothing like cash to give you peace of mind. So having, if this was really, really challenging and worrisome, having a little bit more cash on the sidelines so that you have something to draw on during bear markets if you'd rather leave your investments be. And sometimes just having it there can make the whole process of going through these markets more peaceful and less stressful. So that's another, having a nice buffer can do wonders for just peace of mind and good decision making. So
Archie, take us home.
Yeah. So let us know if you'd like a copy of this. It'll be on our website. And then in the meantime, leave us a comment with your thoughts. Remember to like the video, subscribe to the channel, share it with your family and friends, set up the notifications, hit the bell. And we'll look forward to seeing you next time. You've been watching Last Paycheck, weekly wisdom to help you retire and stay that way. If you like this show, be sure to hit like and subscribe. Last Paycheck is available anywhere you get your podcasts.